चेंज
Hello.
Yes, ma'am.
Pallavi, you can hear me, right?
Yes. Pardon, ma'am.
You can hear me, right?
Yeah, I am able to hear you very loudly.
Okay. Okay.
issue involved in the writ petition was covered by Allahabad High Court. One more thing, yes, Allahabad High Court, the case was pending before the Allahabad High Court, and
Good evening, everyone. I see Pallavi Agrawal from Lucknow warmly welcome you all to the second day of the 5-day GST certification course organized by GIPA Professional Association. Teacher can open the door, but you must enter it yourself. Here our speaker and GIPA can guide you through, but the extra mile, that extra effort has to be made from your side. The urge to be able to learn something new and clear the concept can take you miles ahead. Remember, the expert in anything was once a beginner. With this, I would like to open the session for you all. Before moving ahead, I would like to make few announcements for the participants. Firstly, all the participants are requested to kindly fill the Google form posted in the chat box to mark their attendance, and remember it is mandatory. Failure to do so would be marked as absent. 100% attendance is expected from the participant for issuing certificate. Secondly, towards the end of session, we will be rolling out our feedback forms. Remember to fill and submit the same, as it will help us plan better for the upcoming days of the course. Also requesting the participant to keep themselves on mute and post their queries in the chat box. Our learned speaker will take them either during the deliberation or towards the end of session. In the end, we will have question answer sessions where participants may raise their hands so that we can identify them and give them chance to unmute themselves and ask queries. Uh, Cooperation and discipline is expected from the participants. Thank you. We at GIPA always try to bring quality contents and best speaker to facilitate enriching learning. Today's on the second day, we will be covering time of supply, place of supply, scope of supply, and input tax credit and block credit at RCM. I would like to introduce you to our first speaker of the day, Shivasi's sir is a qualified chartered accountant from a law and a law graduate from Faculty of Law, University of Delhi. He is practicing as an advocate before Delhi High Court and subordinate courts tribunal in tax and commercial law matters. Mr. Karnani has earlier worked with Big Fours consulting firm into corporate tax practice. He has extensively worked in the field of tax matters, including marking of critical tax positions, representation before tax authority for various multinational domestic clients. He has also authored 3 books, out of which 2 are on GST. One is the special contract laws. He is wonderful. He is excellent writer. His write-up research paper regularly appears in journal of repute, including the Chartered Accountant, GST Sutra, and Taxman. Please take advantage of having such learned speaker with us and post your queries in the chat box. Sir, welcome, sir. The floor is all yours now.
Pallavi, I am going to speak first and then we'll take the supply.
Okay. So sorry.
No problem, no problem.
Okay, now I would like to introduce a speaker of the day, C. Dipakshi Agarwal. She is a chartered accountant having 5 years experience in taxation, finance and accounts and audit field. She has designed and set up system for changes in GST law, its compliance in book of accounts. She has also handled 20 state GST workings assessment notice in her previous organization. She have handled tax matters, litigation and audits in past for the company she was associated with. She has also done implementation of accounting system and its maintenance. She takes care of finalization and all audit and assists her finance director for all global projects. MIS in budgeting. She is well versed with GST laws and keep providing training to students, corporate colleagues for their learning and understanding. We are so honored to have you on a forum, ma'am. Welcome, ma'am.
Thank you so much, Pallavi. Thank you so much. Good evening to everyone. I hope it's a weekend today, so everybody will enjoy the session, keeping apart your plans to go out and roam around. Thank you so much for having me here. Now I'm going to start my presentation. Let me go through the flow, and wherever you have a question, put it in the chat box. We can take it later when Shivashish is also done with his with his speech. I hope you all can see my screen. Pallavi, it is visible, right? The screen is visible.
Yes, ma'am, very well visible.
Okay, so I'm going to start. My topic for the day is input tax credit and RCM, that's reverse charge mechanism. For the content for the day is our understanding of what is all about input tax credit, ineligible and block credits, condition for claiming input tax credit, what is proportionate credit, and input tax credit adjustment. And lastly, we'll see what is RCM all about and what kind of services are covered under RCM. To start with, what is the understanding of input tax credit? Input tax basically means all four kind of GST, that's IGST, CGST, SGST, and UTGST, that is charged on supply of goods and services. It is credit for the tax paid on the inputs basically. The basic principle of GST, which was followed earlier in the other taxes as well, indirect taxes, was basically that business should always pay taxes on the addition value they have done, not on what they have got from the others. So it is just the value addition tax that they need to pay to the government, and not the whole value of the supply they provided to the final consumer. Now, so ITC is the mechanism by which business sets off their output tax against the input taxation and make sure that it is just on the value addition and not on the whole value. This is basically concept of input tax credit. That whatever we take it as an input as a business entity, we can take the input of those to discharge our output liabilities. Going on to the next slide. So just one more explanation here. So basically, GST's input tax credit is basically that you can take input on whatever you have consumed to supply your goods and services to the final to the consumers that you are associated with. It only apart from the block credit. So input tax is very clear. Whenever you get something and you use that service or goods to provide an output service, you can claim the input of the same. Going forward, the very basic section and that every one of us should know and make mistakes is the block credits, which is very important to know because it has some confusion wherein we takes the credit and later on we come to know and we have to reverse the credit, and that's a task. The first block credit, and which is very, which is like day-to-day use it, is the motor vehicle credit. We don't get motor vehicle credit. Say, for example, you buy a car for your business, for your director, but you cannot claim an input of the car because it is under the block credit. Now, there is some exception to it. The exception is that if you are in the business of, say, transportation, then you can use the credit, because ultimately what credits you, when you're buying a car, it is just not for transportation of anyone, but to provide your crux of the business, that is transportation of goods. So you are purchasing a vehicle to further provide the transportation services to everyone. So it is again going back to the basic principle that it is to furtherance of the business. So we need to make that the following taxable services are there: further supply of vehicles, conveyance, transportation of passenger, training of driving, flying, navigation, such vehicles and conveyance. So it's very clear that vehicle input can only be taken when you are into a business of vehicle and you're using some way to provide the further services. Moving on to the next block credit, that is supply of goods and services. So there are 5 categories over which it's never allowed. Food and beverage, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery. These are the categories never ever avail the input tax credit, because this is considered, even if you are using for your employee, you're using to provide, say you have organized a party for your customer to increase the base of the customer base. But then also, since it is a block credit of outdoor catering, we cannot provide it. I'll tell you from my example, the common mistake that we do is like we order drinking water for our employees and we'll end up taking the input because we think that it is an allowed input, but it's not an allowed input, because here food and beverages both are disallowed from the inputs. This is under the block credit. Now going on to the next one, life health insurance and rent a cab. Again, so rent a cab was was a bigger expense during the pandemic, when the trains were not available, when the public transport was not available, and business houses took the input of rent a cab, basically when they were providing when they were providing a cab facility to the employees. But this is again a block credit, and you cannot take it. Even though you are providing it to your employees, you cannot take it. Same way is life and health insurance. So whenever every organization gives gives the benefit of health insurance to their employees. But again, coming back, it's going to be a full cost. You cannot take input of that credit. Now there are three more category: membership of club, health and fitness, and so these are again the services which are never allowed. So say for example, you paid for, as a business entity, you paid for a membership of your director, of a club membership of your director. But since it's paid for the director from an organization, and still you cannot take the input because it falls under a block credit. So that is basically for different supply of goods and services, which is categorized as a block credit. We go to the next one. Now the next one is construction of immovable property, plant and machinery. Here again, if we see whatever construction we are doing, and here there is no exception. Say for example, I am getting a property made, I'm getting a factory made for my business entity. Then also you cannot claim a credit, because it says that even if it is for furtherance of business, you cannot claim the input. It's a blocked input. And it excludes plant and machinery. But don't get confused. If there is something which is embedded to earth, and it cannot be detached from the surface, that's actually attached to the surface, you cannot take input of the same. But you can take input of plant and furnitures like your table, chair, those you can take, which is not attached to the surface of the earth. Construction means reconstructions also. Say for example, you're getting some civil work done. You're making a platform made. So then also you cannot claim the input of the same, even if the platform is created for keeping the stuffs for the business entity. We'll go further. Now a composition scheme that we all are aware of, you cannot take the input of the same. It is actually, it's an ineligible input, even if, because any which ways they don't charge you, they pay it from your pocket. Goods or services are both received by a non-resident taxable person, except on goods imported by him, shall not be allowed. Also, any goods and services that you use for a personal consumption, you cannot avail the input of the same. Last is goods lost, stolen, destroyed, written off, or disposed by a way of gift or free supplies. You cannot even take input of these kind of goods that you use. So this was all about the block credit. We need to be very careful when we decide what kind of input we are taking, because after we have taken the input, we go back and reverse it. Then you have to pay interest on the time when you have taken the credit from. We'll go further for the conditions of availment of the credit by a taxable person. You need to have these things to avail the credit. It's just not that you know that you have you know that you're going to spend 100 rupees on the credit of some supplies that you're going to use for business. You cannot take it. You need to have a tax invoice or a debit note which is issued by a registered supplier, which contains your GST number, their GST number, and the proper GST. That's the first requisite of taking an input. Then the second is that the goods and service have been received. Say for example, you ordered some furniture, but till the time you have received the furniture, you cannot take the input of the same. Then if, for example, and then the taxpayer, the supplier, they need to file their GST return on time so that you can avail the credit. That is their GSTR1. That needs to be filed on time, and once they file their GSTR1, you're able to show it. You can see it, the same entry in your GST2B. After you have seen the inputs in the GST2B return, then only make sure that you take a credit, because government are restricted on this, and they may issue you a notice or a straightforward email saying that the credits are not matching. So be aware that you have the tax invoices in place. You know that the services and goods are received, and they have actually paid, you have paid to the supplier also, and they have filed the return. Now there is one more thing that needs to be considered. You need to pay to the supplier. It's just not that today you took the input and you have not paid the supplier till 180 days. So there's one law which says that if you don't pay to supplier within 180 days, along with taxable and tax, you cannot take the input. So today you took the input, but later on you felt that you need to pay it in 8 months. Then what you need to do is you need to go back in the 6 months. You need to reverse the input, and then you can take it back when you have paid it to your supplier. We'll go further. Just give me a second. Okay, now we talk about what is proportionate credit. So we have input and we have input services. When we use it for business, then we can avail the input. When we don't use it for business, we cannot avail the input. Now there can be a scenario when we use it for business and non-business together, which has, you used a say for example, you used any service which was both for business purpose as well as for nothing to be do with business. Then you need to attribute basis on the turnover, and then only you can decide which portion to be taken input from. You cannot take the entire input. The same goes with taxable supplies. So taxable supplies, yes, you can claim the input, but if it is not a taxable supply, you cannot take the input. It can also happen that you have a taxable supply and you have nil rated goods that you supply. Then, for example, say for example, you got an input of computers, and computer you used to give taxable supply also a nil supply as well. So then you need to bifurcate among the turnover of taxable and nil supply, and then basically you can take the input which is proportionate to the taxable supply you have given it to the you have supplied. We go to the next part. Now it's about input tax credit, how you can avail it. So there are 3 types of credits: IGST, CGST, and SGST. IGST credit you can only avail against IGST, and then balance you can use CGST and then SGST. Similarly, now coming to SGST, you need to use it with SGST, with CGST, and then you can balance, you can use again IGST. SGST credits you can use against SGST credit and IGST. So in short, you can use it against each other. Apart from that, that C and S cannot be used against each other. Now we come to reverse charge mechanism. Reverse charge mechanism is actually a mechanism where the recipient has to discharge the GST tax, not the supplier. So usually in a normal scenario, what is done is that the person who supplies the goods, he has to discharge, he has to collect the GST and then he pays to the government. But here, the recipient directly has to pay under reverse charge mechanism. Now, when it is applicable, there are certain lists which is given by CBIC under which the RCM will be applicable. It is also applicable for unregistered dealer to registered dealer, which was applicable, but then government stopped this and it is yet not notified by when this will again come into picture, and supply of services through an e-commerce operator. Today we'll see, now we go to the sex side, who should pay GST under RCM. As per the provision of GST law, the person supplying the goods must mention the tax invoice, whether tax is payable under RCM or not. That generally people do, but as an obligation, you should know which are the services which are covered under RCM, and you need to discharge the liability. Also, we need to keep following points in mind while making GST payment under RCM. The recipient of goods or services can avail of the ITCM on the tax amount paid under RCM only if such goods are used for business or furtherance of business. Again, when you take the input, the basic concept of whether it's used in business or not, that's very important. You cannot there's a point to be noted that composition dealer should pay RCM on a normal rate, not the rate which is applicable to them as a composition dealer, but at a normal rate, and they cannot even take the inputs of the same. Now we'll discuss the list of the RCM. This is very important. I'll tell you, RCM is a tax which we somehow forgets and which we don't check, but later on when assessment comes, this is something which is pointed out by the officer, and we'll end up paying a lot of tax and the interest. And even we can lose the inputs since the time to take the input is still September return. Now we go to the list of RCM, the supply of services by GT in respect of transportation of goods by the road. Here RCM is applicable. The service provider will not charge GST, but as a service recipient, as a corporate house, you have to go back, you have to charge GST on it, and you can take the input of the same. Service supplied by individual advocate, including a senior advocate or firms of advocate by a way of legal services, directly or indirectly, including where contract for provision of such service has been entertained through another advocate. Then also this to a business entity. Again, when you get a legal advice from any advocate over there, you can see there is none cases that they charge the GST, but it's written there that you need to discharge the liability through RCM. So pay it off and you can take the input. The next service is supplied by arbitral tribunal to a business entity. The fourth service is service provided by way of sponsorship to any body, corporate or partnership firm. Then service supplied by director of a company to the said company. Then the next is service supplied by insurance agent to any person carrying on insurance business. The last is the security services that a body corporate gets from an individuals basically, but a registered person. Then you need to discharge the RCM. And there is one last service provided by renting of motor vehicles provided to a body corporate. So these are the services which are covered under RCM that we need to see whether it's covered or not when we see that the GST is not charged and the person is registered. So make sure to discharge your liability by RCM and pay it off. That's all from my side.
Thank you, ma'am. Anyone participants having question may kindly raise your hand or post the question in the chat box. Okay, thanks, ma'am, for a wonderful deliberation. Now, there's one request for the participant. Kindly fill the Google form as the chat box attendance would be considered. Now, I would like to request our second speaker of the day, Shivashish sir. Please, please grace the forum.
Pallavi, unmute him. He is not able to unmute him. Pallavi, you there?
Ma'am, I have unmuted, sir.
Okay.
Yes, now I am unmuted. Right. Thank you, Pallavi, ma'am. A very nice deliberation by Dipakshi. So, input tax credit, as we know that it is the soul of GST law, because GST was based on the VAT law and VAT law was based on the ModVet scheme or the SANVET scheme, wherein what happened was initially there were various concepts that first leg of the sales transaction is only going to be taxable, or the last leg of the sale transaction is only going to be taxable. However, the government later introduced ModVet, thereafter SANVET, and thereafter the tax credit system was introduced in the VAT law also, wherein on the purchases, whatever tax you pay, you set off against the output tax liability which arises on your output turnover. So let us say if in case my output turnover is 150 rupees and on that my tax liability is 30 rupees, and if in case I have made purchases of 100 rupees and if I have paid the taxes of, let us say, 20 rupees, in that case 30 minus 20, so net 10 rupees I would be paying directly to government. Since 20 rupees on purchases I have already paid to the dealer from whom I actually purchased the goods, so he would be depositing those 20 rupees to the government. So net what happens is, on 150 rupees the government has received its due taxes of 30 rupees on assumption basis. We have calculated 30 rupees on assumption basis, 10 from me and 20 from the person from whom I actually purchased the goods. Now moving forward, I would like everyone to participate in the session. the session which I am going to take. So I would be first taking time of supply, and thereafter value of supply, and thereafter place of supply. Participate as in the chat box is running. What you can do is you can write in the chat box whatever your views are going to be on the particular concept which we are discussing. So starting first with time of supply. Time of supply basically is based on the point of taxation rules which were earlier there in the service tax. Now under GST they say it time of supply. Time of supply basically means the time when your liability actually arises, when the liability to pay GST actually arises. Now let's take example. I have provided services to a person. The services were provided on, let us say, 28th January. Recently, I concluded the services. 28th January, I provided the services. I raised the invoice on 2nd of Feb. I raised the invoice on 2nd of Feb. So 28th January, I completely provided my services. And on 2nd February, I raised the invoice. In this case, when I would be liable to pay taxes to government. So whether while filing my GSTR 3B for the month of January to be filed on or before 20th Feb, I am going to pay the taxes, or whether I am going to pay the taxes on or before 20th March. So I am repeating the example again. I would be requesting you to answer on this query. So query is like this. The services were rendered by 28th January. The invoice of those services was raised on 2nd February. So in this case, my liability to pay tax would arise while filing GSTR 3B for the month of January, or while filing GSTR 3B for the month of February. So I would like if anyone can put his comment on the chat box. So PC has replied, Partho they has replied. So PC is saying February. So GSTR 3B, I understand that he is referring to GSTR 3B for the month of February, which is to be filed in the month of March. Partho they is replying GSTR 3B for the month of January, which is to be filed in the month of February. And Gaurav Bhardwaj has replied March. So to my understanding, he is referring CS Rupali ji has replied February. So to my understanding, Gaurav ji and Rupali ji are referring to GSTR 3B for the month of February, which is going to be filed in March. So this is the correct proposition. I have rendered the services. 28th Feb, I completed my services. However, law provides me time of 30 days to raise the invoice. And this is why there is relevance of understanding time of supply rules. Time of supply rule says, once you have provided your services, you are given 30 days time to raise the invoice. I have raised the invoice on 2nd February. So that means my liability would be discharged, is liable to be discharged before 20th March, because my liability arises in the month of February, because law has given me a time limit of 30 days to raise the invoice. If in case I comply with that timeline, the law says you would be liable to pay taxes before 20th March, on or before 20th March. However, let us say, continuing with this illustration only, I have rendered the services on 28th January. However, I raised the invoice, so consider this to be a leap year, having 29 days in the month of February. So I have raised the invoice on 29th February. I have raised the invoice on 29th February. I concluded my services on 28th January. The law provided timeline of 30 days. I have breached that timeline of 30 days. Now, I again ask you, in this case, when my liability to pay GST would arise in this case? If anyone would like to share his or her views on this. So Gaurav Bhardwaj ji is saying March only. February. So February, to my understanding, February and March here means that the liability relates to February month, which is to be discharged in the month of March. Here, since I have breached the condition of 30 days, the law says the date when the services were actually concluded is going to be time of supply. In this case, 28th January is going to be time of supply. And accordingly, what is going to happen is, since on 29th Feb, I raised my invoice, I breached the timeline of 30 days. The law says that in this case, you have breached the timeline of 30 days. The date on which you rendered the services will be considered to be time of supply. That means the liability would be relating to the month of January. And if in case this is discharged in the month of after the filing of January return, that is while filing February return, which is filed in the month of March, I would be liable to pay interest. And for this reason, that time of supply provisions are very relevant to understand, since it actually decides when I am liable to pay the taxes. And if in case I breach, then in that case, interest liability arises. Rohit Raghavan ji asked, what is GSTR 3B? Rohit ji, GSTR 3B is a monthly return. So return in simple terms is a summary of transactions. Return is nothing but a summary of transactions. That summary, every person has to report to government. And that reporting is done through GSTN portal. GSTN पोर्टल पे आप जाते हो, आप GSTR 3B आप बनाओगे, वहां पे फिगर्स वगैरह डालोगे, वहां पर आप बताओगे what is my turnover, what is my output tax liability, what is my input tax credit, and what is the actual liability which I am going to discharge in cash. So in the first illustration which I discussed, I said 30 is my output tax liability, 20 is my input tax credit. I would be discharging 10 rupees. So all these reporting happens in GSTR 3B. The due date of GSTR 3B is 20th. If the turnover is more than 5 crores, and if the turnover, so Sumit Poko ji is saying GSTR 3B input credit tax. So Sumit ji, GSTR 3B is basically a return. It captures both output and input details. All these details are captured in GSTR 3B. And now with this, I am proceeding to share my slide. Just a second. I hope this slideshow is visible.
Yes, sir, very much.
Okay, thank you, ma'am. So time of supply of goods. So we have different rules for time of supply of goods and time of supply of services. Section 12 deals with time of supply of goods. Section 13 deals with time of supply of services. We are going to touch upon the basic concepts which are relevant to understand as a GST professional. Obviously, there are various nitty-gritties in this, but we are not going to touch upon that because it is going to take a lot of time, and we would be fading away from the concept which actually we need to understand out of this course. The time of supply in case of goods is the earlier. So first threshold is, the law says it is earlier. Earlier of what? Earlier of the actual date of issue of invoice, the due date of issue of invoice, or the date of receipt of payment. So let us say I have received some advance payment. In this case, I am discussing the original law. However, later on some exemptions were given. We would be discussing those exemptions also. What happened was, let us say I received some advance. I am a vendor. I am going to supply, let us say, watches. I have received some advance. Then in that case, my liability has arisen. I have received the advance in the month of July 2017. However, the watches are going to be supplied in the month of August, and the invoice is going to be raised in the month of August only. In that case, my liability to pay GST would arise on or before 20th August, because my liability time of supply has already arisen in the month of July 2017, when I actually received the advance. So these are the three threshold in case of time of supply of goods, wherein they say actual date of issue of invoice, the due date of issue of invoice, the date of receipt of payment. These are the three thresholds. However, later government recognized that under the earlier VAT law, advances were not taxable. Advances received were not taxable. However, later the government introduced the exemption, saying that as far as in a transaction where goods are involved, it is a transaction of supply of goods. In that case, we are not going to tax the advances. The government introduced this exemption, and thereafter it was decided that the timeline in case of time of supply of goods is going to be actual date of issue of invoice or the due date of issue of invoice, because the third condition, advance payment, has been done away with. Now let's take another example, because now we would be discussing these two cases. Let us say I am sitting in the month of January. I have issued an invoice for the goods which are going to be supplied later on. I have already issued an invoice. I have issued that invoice in the month of January. The goods are going to be supplied in the month of February. In this case, my time of supply would arise in the month of January itself, because I have raised the invoice. So it says actual date of issue of invoice or due date of issue of invoice. Now let's take another example. I would be supplying my goods on 28th February. What I've done is, I haven't raised any invoice. However, I removed my goods. I supplied those goods. Section 31 says before removal of goods, you were actually liable to raise the invoice. In this particular case, you have raised the invoice, let us say in the month of March. You have already removed the goods in the month of February itself. Now in this case, section 31 comes into play, and it says, since the due date of issuing the invoice was before removal of goods, I am referring to non-continuous supply of goods involving movements. It says the time of removal of goods for supply. So I have removed those goods in the month of February. However, I raised the invoice in the month of March, and as such, it says you are liable to pay the taxes while filing your GSTR 3B for the month of February, because your time of supply has already arisen in this case. Just because you have delayed in issuance of your invoice, you cannot post your liability to a later date. And for that reason, it says, since the due date has arisen, you are liable to pay taxes. And this is being done to capture a loophole. Understand a point wherein I am supplying the goods. The vendor is saying that I would be making payment after 3 months. I am saying here, I am the 3 months are going to be causing a lot of difficulty for me. So for that reason, I will not raise the invoice. I have supplied the goods. Because the vendor is going to make payment after 3 months, I say that I am not going to raise the invoice. And what I have done by this way is, I have deferred my liability by 3 months. The lawmakers analyzed this and said, since you have already supplied the goods, we treat as a supply has already been made and you are liable to pay tax. Forget whether you have received the payment from your customers, you are in any case liable to pay the taxes. And for that reason, to capture that loophole, what they have said is either if in case I raise the invoice, if it is earlier, then I am liable to pay the taxes. If in case the due date approaches, I have forgot to raise the invoice, in that case also, I have become liable to pay the taxes. Now there is a concept under GST that let us say I took an example, there is one time order and I am supplying watches. Now let us say there is an open order. Many times in PSUs what happens is they float an open order, and in terms of that open contract, what happens is the goods are supplied on a monthly basis or a quarterly basis. So in that case, what the law says, as and when your liability as per that contract triggers to raise the invoice, in that case, you are liable to pay the taxes. I mean, your time of supply has arisen, and in that case, you would be liable to pay the taxes. So there is a difference of concept. In case of continuous supply means there is a running contract, there is an underlying contract, and under that contract, you are making n number of transactions. So there is one contract, there can be 10 number of invoices being raised each month. In that case, what they say is, if you have raised an invoice earlier, then your time of supply arises. Or if in case the timeline as mentioned in the contract arises, then your liability to pay taxes arises. Now moving forward, let us say if I have raised the invoice and the vendor makes 1,000 rupees extra payment of rupees, let us say 500 rupees extra to me. In that case, the law has provided another exemption by saying that the extra amount till 1,000 rupees is not going to be taxable. The time of supply would not arise. In that case, you are not liable to pay taxes for that 500 rupees which you have earned in extra, which you have received in extra from your customer. No tax on the advance received against the supply of goods. This we have discussed. Now the two conditions are actual date of raising the invoice or the due date of raising the invoice will be time of supply in case of supply of goods transaction. The first example which I discussed for this time of supply provisions was I have not raised the invoice within the period which is allowed by law, that is 30 days. In that case, what I mentioned was there was a transaction of 28th January. The services were supplied on 28th January. I raised the invoice on 2nd February. In that case, my time of supply would be February and I would be liable to pay taxes on or before 20th March. However, if in case the invoice is not raised within a period of 30 days, that is, I raised the invoice on 29th February, considering it to be a leap year. In that case, my time of supply already arisen in the month of January. If in case I am making the payment of taxes in the month of March, on or before March, 20th March, in that case, I am liable to pay interest. Now coming to the services part, we have discussed the services part. There is one important point which is to be noted in services part is that under service tax law also, the advances were taxable. Accordingly, the exemption which was granted in case of advances received for the supply of goods is not extended for advances received for the supply of services. If in case you are receiving any advance in case of supply of services contract, in that case, you are liable to pay tax on advances also. That provision still is captured here. The three conditions in case of supply of services are actual date of invoice, the due date of invoice, or the date of receipt of payment, whichever is earlier. Whichever is earlier, out of these three conditions, you have to check. And that due date of raising the invoice is obviously subject to you raising the invoice actually within the time limit which is provided by the law. Now we have separate set of rules in case of reverse charge mechanism. The reverse charge mechanism is separate for goods and services transaction, wherein there are majorly three conditions. Three conditions in case of goods. It says the date of receipt of goods, the date of payment, if you have made the payment. So Dipakshi has already discussed there are certain transactions on which reverse charge mechanism is applicable. Reverse charge mechanism as in the government has said rather than supplier collecting the taxes and then depositing us, it is better that the recipient doesn't pay taxes to supplier and then supplier depositing us. It is better that the recipient directly pays taxes to the government and take input tax credit. The recipient earlier, what the recipient was doing, I am a recipient of services. What I was doing was I was paying the taxes to supplier. The government decided in certain cases it is better that rather than recipient paying the taxes to supplier, better that we directly collect the taxes from the recipient. In that case, the RCM provisions were introduced. Now, the reason for these introducing these provisions is to simplify the provisions, to ease the compliance burden, and also to gather more revenue to avoid the loopholes of tax evasion. Let's take example of insurance agents. The insurance agents are providing services. There are n number of insurance agents. Many of our known people in circle are LIC agents. The government has said in this case, what they have said is, rather than I going to each person, rather than I following each supplier, that whether he has deposited the taxes on the commission services which he has rendered to insurance company, better that I make liable the insurance company itself. And for this reason, there is a reverse charge applicable in case of insurance agency services, wherein the government says better that insurance company itself pay the taxes. And for that reason, there are separate set of time of supply rules for goods and services. These are procedural things. Obviously, when you are going to run through the PPT, you are going to understand. I wish to discuss majorly on the concept part, which I would like to keep discussing since the time is short, and better that we close all the concepts. So three conditions. I am just running through these three conditions. So the date of receipt of goods, the date of payment. Since I am the recipient, I am liable to pay the taxes. I would be making payment to the supplier for the value of goods. So the date of payment, which I have made as a recipient, or 31 days in case of supply of goods, where it relates to supply of goods. So I have received one bill. The date on that bill is, let us say, 5th of January. So counting 31 days from that 5th of January would be around 4th of February. So 4th of February, or let us say when I received the goods were received on 3rd of February, and the payment was made on 4th of February. So in this case, my liability to pay RCM would in any case would be in the month of February. That is, however, had it been in a separate month, then my liability would have been decided accordingly. In this particular case, since the liability is falling in the same month, all the three conditions are following in the same month. For that reason, I would be paying taxes on or before 20th March while filing my GST 3B. Another thing, as far as supply of services are concerned, in case of RCM, in case of supply of services is concerned, there is no condition of receipt of services. The receipt condition is only in case where the supply of goods transaction is involved, and not where supply of services transaction is involved. So in case of supply of services, what I have to check is the date of payment, or 61 days from the bill, whichever is earlier. So if in case it is following, let us say, let's take another example. I have made the payment on, let us say, 2nd February, but I got the bill on 1st January. I got the bill on 1st January. 61 days fall in the month of March. However, I have already made the payment in the month of February. In that case, my time of supply would fall in the month of February and not in the month of March. So I would be liable to pay taxes on or before 20th March because my time of supply was in the month of February. Now coming to next topic, again a very relevant topic, that is value of taxable supply. But before going to that topic, I would like to see the chat box. Okay, so let's take example. I would like to have your views on that. So I am a company. What I've done is I have made an arrangement for my employees to have food for them in a canteen. The canteen is also in my company only. The canteen serves the food at the rate of rupees 50 per plate as against the market rate. Had you had that particular employee going in Haldiram or let us say Bikaner Wala, the cost of that plate would have been rupees 100. However, the company, in order to provide flexi benefits to its employees, deliver that plate to a particular employee, all the employee of the company at the rate of rupees 50 per plate. In that case, what is your understanding? The government would have said that you are liable to pay tax on rupees 100 or you are liable to pay tax on rupees 50, which the company is collecting. The company says, the company's arguments are like this, that since I have collected 50 rupees only, I should be liable to pay taxes on rupees 50 only. However, the government says, who said you to provide the discounted plate? The market rate of plate is rupees 100. It is your internal arrangement. Why are you reducing the taxes for our purpose, which we would be using for the development of state or welfare activities? So what is your understanding? Anyone would like to share his views on this? So PC tax will be collected on 100 rupees. Harshit ji has said that tax is going to be collected on 100 rupees. PC is saying that GST is post discount. What he's trying to say is GST is applicable on a value which is after discount. So tax should be 50 only. I would request other members if they would like to add, because we are not getting any majority. Harshit is saying 100 rupees, PC is saying 50 rupees. So anyone can say anything so that we can decide. Tax should be at the market price. Okay. So majority goes to market price. So I would like to justify that it is going to be applicable on market price. I would also reply on the PC's view that the GST is post discount. So what the government has said, that employer and employee are related parties. Employer and employee are related parties. Forget everything. Forget everything. The value or the transaction value in a related party transaction is going to be open market value. The government has said, forget discount. Forget whatever you have collected. The value of transaction would be rupees 100 because it is open market value. So moving forward, so for this reason, it is very relevant to understand value of supply. Because if in case you would have paid the taxes on 50 rupees, later the departmental officials would have approached you, audited your books, and would have finded that you have paid the taxes on rupees 50. They would have triggered the demand on balance rupees 50. They would have triggered the balance rupees 50 demand, tax demand on rupees 50, and they would also have triggered interest liability. And if it is a bigger setup, then there are penal and prosecution provisions also. If it is a bigger setup, like let us say Tata Industries or Reliance Industries, where there are n number of employees, so the liability would be in any case more than 5 crores, and in that case the prosecution provision applies, which are provided under section 132, which provides for arrests also. So for that reason, it is very relevant that we understand value of supply provisions. So I'm going to run through PPT. The value of supply of goods or services shall be transaction value, where supplier and recipient of the supply are unrelated. So let us say I'm a stockist. What happened was the government announced that the country is going to be mask free. There is no need to wear the mask. Forget mask now. In that case, I am a stockist. I have kept n number of masks lying in my godown. In that case, I was actually supplying those masks at rupees 10. Let us say earlier, before this announcement, I have purchased those masks at the rate of rupees 6. I was selling those masks at the rate of rupees 10. However, government announced that to give moment of joy to everyone and to gain political mileage, the government announced that no mask needed. I am a stockist. I was confused. What I did, I sold these masks at the rate of rupees 4 at a loss. I sold these masks. I sold these masks to unrelated persons at rupees 4. My costing was rupees 6. In that case, what is your view? The transaction value should be, I am giving three points, three options. The transaction value would be rupees 10. Transaction value would be rupees 6. Transaction value would be rupees 4. Transaction value rupees 10, because I was earlier selling those goods at rupees 10. Those masks were sold at the value of rupees 10 earlier, before this announcement. It was the open market value. Just because government announced something, you are going to reduce the prices and reduce the taxes of the government. The authority says like this. Or you are going to say that rupees 6 is going to be applicable because you cannot sell your mask below cost price. You cannot sell your mask below cost price, and for that reason you say that the value of supply in this case would be rupees 6. Or you say that this is because I am selling these goods, mask, to unrelated person, and for that reason I can choose any value, and for that reason I have chosen rupees 4. I was in my capacity to bear the loss of rupees 2 per mask, and this is what the value I have decided. It is my commercial contract. I am deciding whatever value I think fit for myself, and I'm not selling those masks to unrelated person. So this is my argument. What are your views on this? I would like to have your views. Okay, so I've got a lot of views here. C is saying 4, Artho De is saying 4, Sumit Poko is saying transaction value is 6, Rupali G is saying 4, Kuber G is saying 4. So there is no name in one case. 78E3 F4 F2 says 6. Gaurav Bhardwaj Ji is saying 6. Gaurav Bhardwaj has said 4. Rohit Gupta 6. Ajay Sonadar says 4. So I'll share my views supporting with law. Forget everything. I am reading law. You don't have to become emotional, or let us say understand the commercial realities. Law is what is captured in the legal provisions. Nothing beyond that, nothing lesser than that. In this case, what the provision says, value of supply of goods or services or both shall be transaction value where supplier and recipient of supply are unrelated. And the second condition is price is actually paid or payable and price is the sole consideration for the supply. Rupees 4 is my transaction value. I am selling those mask at rupees 4. The supplier and recipient of supply are unrelated. Price is actually paid or payable and price is the sole consideration. Price in my case is the sole consideration. Rupees 4 is the only consideration which I am getting. I haven't made an arrangement wherein I've said rupees 4 is going to be paid now and rupees, let us say rupees 6 are going to be paid later, or for rupees 6 you are going to pay something else to me. Many times it happens that let us say I'm supplying a mask. Coming to same example, I am saying that you pay me rupees 4 only in cash and balance rupees 6 you pay me in some other terms. You pay, you give a pen or something like that. In that case, since I have already given the example, I have already made all the facts clear. Since the government has already made announcement that the country is going to be mask free, and I am a stockist, I have the capacity to take the loss of rupees 2. I am taking that loss. I have decided that this is the transaction value, price is the sole consideration, and accordingly, in this case, the tax is going to be charged on rupees 4. The tax is going to be charged on rupees 4. The list of related persons are given here, and what we discussed was employer-employee. The third in this list, employer and employee, are considered to be related persons. Related persons definition, obviously you can go through it. The transaction value includes, it is again a very relevant thing. So let us say you are supplying some goods. However, your contract is a CIF contract with your customer. What does CIF mean? If anyone can tell, if anyone can share his views, what is CIF contract? I have made a CIF contract. What does that mean? Chat box is running if anyone would like to share. What is CIF? I have made a CIF contract, because from that understanding of term, we are going to understand this provision also. Anyone, sir? Ajay ji has said cost including freight. Okay, to partial extent it is correct. Cost, interest and freight. Rupali ji has said cost, interest, freight. Okay. Anyone else? Cost, insurance, freight. Parthodi, they has said this. Cost, insurance, freight. Harshit Agarwal ji. Yes, cost, insurance, freight. The CIF means cost, insurance, freight. I have undertaken a CIF contract with my customer, which means the customer wants me to deliver the goods to his premises, his place of business, and the price which he is paying you includes, apart from cost, it includes cost of insurance if the goods get damaged in between. In that case, since the customer has taken a insurance from you, if the goods get damaged in between while transportation, in that case the seller is liable, because he has already undertaken, he has already agreed to undertake a CIF contract, and the customer has said you are liable to deliver the goods at my premises, and the freight charges are also recovered, and for that reason the term also mentions freight. And in this particular case, my transaction value, I was supplying the mask at rupees 10. The customer says you enter into a CIF contract, you charge rupees 12 to me. In that case, what is my liability? My transaction value would be rupees 12. My transaction value is not going to be rupees 10, because the law says transaction value includes ancillary charges, insurance packing charges, ancillary charges which you have charged from the customer are also included in the transaction value. Now the next question arises. What is the tax rate which is going to be applied in this case? Again, I would be giving you options and you would be answering. The first option is on entire 12 rupees, apply the tax rate of the goods which is being supplied. So let us say watch is getting supplied, watch is taxable at the rate of 12%. The services, otherwise we procure many services, the services are taxable at the rate of 18%. 12% goods, 18% services. In this particular case, I would be applying tax rate of 12% on entire 12 rupees, which also includes 2 rupees on account of insurance and freight services. I would be applying 12% on 10 rupees, that is value of goods, and 18% on value of services, that is rupees 2. So 10 rupees I would be applying 12%, and on rupees 2 I would be applying 18%. So that is the second option. Or since the services were the later in the transaction, accordingly what I'm going to do is I would be applying 18% on entire rupees 12. So three options. On entire 12 rupees, I would be applying 12% tax. On entire 12 rupees, I would be applying 18% tax. Or I would be bifurcating the amounts. On rupees 10, I would be applying 12% tax. And on rupees 2, I would be applying 18% tax. So these are the three options. I would like to again have your views on this. Partho De has said that 12% on entire 12 rupees. Rupali Bejal ji, Rohit Gupta ji has said 12% on rupees 12. Total value at maximum rate of tax. SK Jain ji has said total value at maximum rate of tax. So that means what he is trying to say is on rupees 12, we are going to apply 18% tax, because 12% and 18%, we have higher rate, that is 18%. Just a second, I'm missing the chats. Ajay ji is saying 12% on 10 rupees and 18% on 2 rupees. Rohit Raghavan ji has said 12% on 12. Then if goods are delivered, then extra 6% on 2. So that means that you are applying 12% on 10 rupees and 18% on 2 rupees, just as Ajay ji has said. So here comes the concept of composite supply. Composite supply under GST means the transaction which is naturally bundled, it would be liable to be taxed at the rate on which principal supply is getting taxed. A transaction of a composite supply in nature is going to be taxed at the rate on which the principal supply is getting taxed. First, I have to justify this to be a composite supply. Composite supply says that the legs of the transactions are naturally bundled. Whether in this case it is naturally bundled, yes, it is a commercial practice that I enter into a CIF contract. It is a normal practice. I enter into a CIF contract. It is naturally bundled? Yes. Naturally bundled it is. And what is the principal supply in this case? My principal supply in this case is goods and not services. My principal supply is supplying those goods. Rupees 2, which I have charged for supplying additional ancillary services. These are insurance and freight are ancillary, because a same businessman also enters into a FOB contract. FOB contract means I could have supplied that mask only at the value of rupees 10. That is a FOB contract wherein I am not incurring a responsibility to undertake transportation and insurance. So that is also a transaction which I undertake. That is also a transaction, CIF transaction, which I also undertake. So this is naturally bundled, wherein my principal supply is supplying those masks. My business is supplying the mask. Even my HSN code in the GST registration says supplying mask. It doesn't say supplying freight services. It doesn't say supplying insurance services. And for that reason, it is a principal supply. And since it is a composite supply, the tax rate which is applicable on the principal supply is going to be applied on entire transaction. Accordingly, in this particular case, on rupees 12, 12% GST rate is going to be applied. On rupees 12, 12% GST rate is going to be applied. Hope I am able to make it clear. I'm not running through this PPT because obviously the concept is already entered, is already there in the slide. However, the discount part I would like to discuss, because in commercial transactions many times it happens that there is a discount, and even one of the person said that the discounted value has to be taxed. It says when the discount is captured in the invoice, in that case, what you have to do is you don't have to pay the taxes on the entire value. So let us say I have visited a store and they are saying sale. I have asked, they said 20% flat discount. 20% discount flat is being given to the customer. In that case, 1000 rupees, I purchased a item which is of 1000 rupees. They applied 20% discount and given me a discount captured in the invoice, rupees 200. And the balance amount is rupees 800. In this particular case, the transaction value for the purpose of GST is rupees 800. I would be paying taxes on rupees 800. Similarly, what happens is there are n number of contracts. So this was a simple example. There are n number of contracts wherein it says if you have reached 1000 unit of sales in a year, the company says to distribute. If you reach 1000 units of sale in a year, we are going to give you additional discount of rupees, let us say 5%. Of rupees, let us say 5%. In this case, what my transaction value is going to be, my transaction value would be reduced by that 5% because there is an underlying agreement in this case. Since I have satisfied the condition of agreement, I am giving that discount in terms of that agreement, written agreement, and accordingly, the transaction value is going to be reduced by 5%. That transaction value, how that is going to be reduced? You have said that during the year, I have already sold the goods. I have already raised the invoice. I have raised the invoice before removal of goods, the concept which we discussed. And now you are saying that the discount is going to be given, transaction value is going to be reduced. I have already raised the invoice. I have already paid the taxes. The transaction value is going to be reduced by raising a credit note. However, it is required that there should be an agreement in place. The agreement should be specifically mentioning 5% discount if the 1,000 units are sold during a year. If that understanding is not captured in the agreement, then the discount is not liable to be deducted. The taxes which are paid to the government are paid. You cannot now reduce the transaction value and raise the credit note. That is not possible. So this is the concept of discount. Now coming to place of supply. So place of supply again is more or less is a provision which is already captured end to end in the law. So there is no sort of analytical points, or I mean to that extent. Obviously in law there is always analytical things, but not to that extent, and you can go through slideshow to yourself. However, I would like to give you the concept. GST has dual framework. What we understand from dual framework? Dual framework means where the center and state are both levying transaction on a same transaction. There is a dual levy. Center and state are both levying taxes on a particular transaction. It is called dual framework or dual levy framework. Now, and GST is also consumption based tax. They say that GST is a consumption based tax. One prominent example is in case of export of goods. Since India is also a member of various international agreements, various international protocols, India have to also follow, wherein one protocol is everywhere, which is everywhere applicable, is the goods should be taxed in the country where the goods are consumed. Since GST is also consumption based tax, and accordingly, since I am exporting the goods, and for that international protocols, for those international agreements, and since the goods are being exported, that in itself is a evidence that the goods are going to be consumed outside India, and accordingly the government is not liable to collect taxes on that transaction, and for that reason there are refund provisions under GST wherein they say that in an export transaction the taxes which are being charged either at the purchase level or at the sale level are going to be refunded. These taxes are going to be refunded. And since GST is a consumption based tax, and for that reason a provision is captured that in case of exports the taxes are refunded. The reason I discussed this example was to apply the same concept at micro level. So macro level we have international level, which we discussed that there is an export transaction. We have micro level also. What is micro level? I am sitting in Delhi, but I am supplying to a dealer, goods to a dealer who is sitting in some another state. In that case, what tax I would be charging? I would be charging IGST, because IGST tax implies that the transaction is interstate in nature, and while charging IGST I would be mentioning place of supply. Place of supply is required to be mentioned just if in case you would mention IGST. How the government is going to understand which state is actually entitled to recover the taxes, As I said that this is a consumption based tax. The tax should go to the state where the goods are getting consumed. To the state where the goods are getting consumed. In this particular case, I am sitting in Delhi, I am supplying goods to a dealer who is there in Haryana. So what the government has said, you would be charging IGST and your place of supply would be Haryana. Your place of supply, which to some extent can be called as place of consumption for the ease of understanding only. Since I am supplying my goods to a dealer in Haryana, it can be fairly implied that the goods are going to be consumed in Haryana, and for that reason the place of supply, the place of consumption is considered to be Haryana. The government has said that place of supply in this particular case is going to be Haryana, and for that reason section 10(1)(a), which is at the left side of your screen, it says location of goods at the time at which movement terminates for delivery to the recipient. So here the goods are going to Haryana, the place of supply would be Haryana. I would be charging IGST. However, how come the government is going to know which state is actually entitled to collect the taxes? The government got to know that, see, Delhi is not entitled because there is IGST tax is levied. However, which is the actual state who is going to get the taxes? Whether it can be given to UP? No, that is not possible, because place of supply in this particular case, the goods terminates its movement in the state of Haryana, and accordingly IGST would be levied and place of supply is going to be Haryana. Now there are many type of transaction. Let us say bill to ship to transaction, wherein I am sitting in Delhi. I have asked a dealer who is in Haryana to directly supply to goods to my customer who is sitting in UP. So I am in Delhi. I have asked my dealer, my supplier, to directly supply goods to UP, to a person who is at UP, rather than you supplying me goods at Delhi here. So I am a buyer. I am a registered buyer. What I have asked is, I have asked a registered seller to supply goods directly to a third person who is sitting at UP. So what in this case place of supply are going to be? First, Haryana person. Since GST law goes along with contract law, my contract, my commercial arrangement, I am sitting in Delhi, my first commercial arrangement is with the seller who is sitting in Haryana and buyer who is sitting in UP. However, Haryana and UP person are not commercially contracted. So I have commercial arrangement with Haryana person to supply goods. I have to supply goods to me, and I have commercial arrangement with UP person to supply goods to, I would be supplying goods to UP person. So in this case, first IGST is going to be charged. I would be charging. So first, that Haryana dealer is going to be charging IGST to me. He would be mentioning what he's going to mention. Place of supply is Delhi because he is billing to me. I am sitting in Delhi. He would be charging IGST, and I would be raising an invoice from here, and I would be charging IGST, and I would be mentioning place of supply as UP. I would be mentioning place of supply UP. So that person, Haryana person, is going to bill me mentioning place of supply as Delhi, charging IGST. I would be charging IGST, mentioning place of supply as UP. In a way, what happened actually, on my purchase, I got IGST credit. On my sale, I would be charging IGST. I would be setting off those IGST. I procured the goods at the value of rupees 100. I sold the goods at the value of rupees 150. Net 10 rupees I paid in cash. Ultimately, what happened? Back to square one. While I would be selling those goods, I would be reporting in my GST return as place of supply UP, the state which has ultimately received the goods. The seller in Haryana has mentioned my state as place of supply, Delhi. However, he mentioned 20 rupees in that particular transaction. I have taken the credit of rupees 20, and at the end I reported in GST return 30 rupees as the GST on that particular transaction and mentioned place of supply as UP. Ultimately, what happened? Taxes traveled to UP state, and accordingly UP state got the revenue. And for this reason, we say GST is a consumption-based tax. GST is a consumption-based tax. The state where the consumer was actually consuming those goods has received its taxes. However, obviously, this is a macro level concept. There are exceptions to every concept. Nothing comes in a square box. So for this reason, there are various exceptions. Exceptions are like this. So let us say again, we are going to discuss exceptions in a services contract. The government says in case of restaurant services, you are a person who have come with your friends at Delhi from UP. So you were actually residing in Ghaziabad. You have come in Delhi to eat food. In that case, what the government has said, you can take an argument that the person who has actually consumed those goods is ultimately going to go at Ghaziabad. The person is going to go at Ghaziabad. The taxes should travel to that particular UP state. However, to avoid dispute, the government has said in case of restaurant services, the place where the services are supplied, in this particular case, persons have come to Delhi to eat food. The place where the services were supplied at Delhi, and accordingly, the place of supply is going to be Delhi. I am a restaurant. The place of supply is also in Delhi. I would be charging C and S, that is CGST and SGST. And what I would be mentioning? I would be mentioning place of supply as Delhi only. The Delhi government has received the taxes. Now let's take another example. Again, it creates an exception to the general rule. In case I am providing a courier services, I am sitting in Delhi. I have taken a courier services from a Delhi person only. That also person is also registered. That packet which is to be couriered is going to go in another state. What I am doing is I am sending my goods through parcel, and that parcel has to go in UP. You may say that courier services, considering composite supply, considering everything, actually UP government should realize the taxes on this particular goods which are being sent through courier. The UP government should actually get the taxes on courier services also, because ultimately the goods are going to be consumed in UP state, because you are sending the goods in UP. However, as I said, there can be exception to many rules. Here is also exception that when a person is supplying certain set of services to a registered person, the government says as a thumb rule, what we are going to say is, when you are supplying services to registered person, we are going to take place of supply of that registered person. In this particular case, since I was sending the goods to someone in UP, courier services person was also in UP, that he was also in Delhi. I am also in Delhi, and we are supplying those goods. I am sending those goods to someone in UP. So I would be given an invoice mentioning place of supply as CGST and SGST, because what the government has said, to avoid disputes and to avoid arguments, that you should actually, the taxes should go to the state where the goods are going to be ultimately consumed, and all the ancillary transactions, that is courier services in this case, should also go to that particular state, because the taxes, because the goods are going to be consumed in UP state. To avoid those disputes and to also ensure that I get input tax credit, the government has said that courier services person who is in Delhi is going to charge CGST and SGST, even though the goods may be going to UP, because I am a registered person. So you have to go through these rules. There are separate set of rules for goods, for services. There are separate set of rules where services are provided to a person who is outside India or to a person who is within India. Let's take another example. I am a visitor here in Delhi. I have come from let us say Tamil Nadu. I would be residing in a hotel property. Now you may say that since I belong from Tamil Nadu and I was actually doing something relating to my office in that hotel room, which would have benefited my transactions which are happening in Tamil Nadu, the government has clarified nothing going. Since the property in this particular case is located in Delhi, we would imply that the services are also getting consumed here in Delhi. We are not going to check ultimately where these services are getting benefited. I am saying that while sitting in my hotel room, I was working on a transaction which was supposed to happen in Tamil Nadu. The government said nothing going. We are going to consider place of supply as Delhi, where the property is located. So in that case, the hotel person is what tax he is going to charge. He is registered in Delhi. The property is also located in Delhi, and the property becomes place of supply, as I said. So in order to determine whether C&S and IGST is leviable, the thumb rule is, if the location of supplier and place of supply are in the same state, CGST and SGST are applicable. If these two are in different state, then IGST is applicable. So in this particular case, I am a hotel person registered in Delhi. The property is also located in Delhi. Since place of supply rules says wherever the property is located, that place is considered to be the place of supply, and accordingly I would be charging CGST and CGST and SGST in this particular case. He would be billing CGST and SGST. And for this reason, you may have seen, if you have taken any hotel services or let us say guest room services, they charge CGST and SGST normally, because my registration is also here only in Delhi and my place of supply is also in the same state. With this, I think I conclude my presentation here. There are specific rules, and those rules can be gone through this slideshow because these are captured in the, better that you understand your way only. With this, I hand over proceedings to Pallavi ma'am. If any queries are there, I would like to have them. What if the food is packed for other state? Chandrakant Sharma ji has said, what if the food is packed for other state? So it is a bit technical. I'm going to discuss this also. When an element of service is involved, when you go to a hotel apart from getting the food, what you get is a soothing area where you can sit. A waiter is coming to serve you the food. In that case, an element of service is involved. And in that case, Schedule 2 says wherever while serving food, an element of service is involved, in that case, the transaction is going to be considered as a supply of services. And once it is supply of services, place of supply of services rules are going to be applicable. And accordingly, the place of supply would be the place where restaurant services are provided, the example which we discussed. However, in your case, you are saying that I am not sitting in restaurant. What I have done is I have taken the food and I have gone. I have gone and I am going to eat food at my place only. I don't want that cozy sitting which restaurant says so. In that case, it is a supply of goods, and supply of goods, place of supply rule says where the delivery terminates. In this case, I came from Ghaziabad. I have taken the food from Delhi. I have got that food packed and I have taken that food back to my Ghaziabad. In that case, the delivery terminates in Ghaziabad, and accordingly, IGST is going to be applicable because supplier is located in Delhi. Place of supply as per supply of goods rules is in the state of UP, since both are different states, and accordingly IGST is going to be applicable. No more questions, I think, in the chat box. Pallavi ma'am, over to you, ma'am.
Thank you, sir, for such an insightful presentation. I am sure participant had a good time listening to you. The way you covered the entire topic with so much ease is really appreciable. Thanks, sir, for a wonderful session. Now the house is open for the interactive question answer sections. Participants may unmute themselves and ask questions to both the faculties if they have any.
I think there are no questions. Everything is clear to audience.
Okay.
No, I think Shivashish has explained it at a great length. So I think topic was very well covered, and it was really very interactive, I must say.
Thank participants. I'm happy to say we had such a wonderful session with such a knowledgeable speakers on board who took their time to guide and educate all of us. Thank you so much to our speakers and audience for being patient throughout. With this, we come to the end of today's seconds. Please remember to join tomorrow and mark attendance for all the days to receive the certificate at the end of the course. Please also ensure that you all fill the feedback form, as your feedback is very valuable to all us, valuable for all of us. If anybody has not marked the attendance, kindly mark the attendance and please ensure that you all fill the feedback form. Now I hand over the proceeding to Praveen sir for his concluding remark and formal vote of thanks.
Thank you, Pallavi ji. Thank you. Good evening, everybody, and our faculty and to participants. We would like to say that our motto is going together with the speed and accuracy. Going together with the speed and accuracy, and also we prefer quality instead of quantity. So every participant should take care that only for purpose of certificates they will not be attended, and they should be gain some quality of course from this our learned faculty members. And thank you for our faculty members Shivashish Kannani ji and Dipakshi Agrawal ji for their nice deliberations, and every participants for their continuous support to our course. And I would like to say to appreciate to our faculty members for their nice deliberations. Thank you, sir. Thank you, everyone.
Thank you, sir. Thank you, participants. Thank you, Pallavi ma'am.
Welcome, sir.
Every participant should be got attendance in Google form and also give feedbacks so that we can do better before leaving the session. Thank you, sir. Thank you. Thank you, everyone.
Sir, there is one more question right now. Somebody posted, Satyanarayan ji, few cases vendor cancel the registration input eligible.
Which one? Repeat, madam.
Satyanarayan ji has posted few cases vendor cancel the registration whether input is eligible.
No,
Yes, I'll
not
answer
eligible.
that one. I will answer that one. So if the vendor has cancelled the registration, if he has given you the input before cancelling for that particular month, then you can avail the input. Otherwise, you cannot avail the input. So it is better to see at the time when you get the invoices from them, you go on a portal and using their GST number, check whether they are, they are a regular vendor or not, and their registration is not cancelled, so that you don't lose on the inputs. I hope that sorted out the query.
Thank you very much, ma'am. Now we conclude the session. Hope all the queries have been sorted out.
Yes, yes.
Now we can conclude the session.
Okay, participant, please join tomorrow at 6:30.